Hello and welcome. You're watching Hot Money. I'm Hiral Dadia and with me is Agam Vakil. Clearly, if you see in terms of where markets are concerned, Agam, today, you have the benchmarks which are outperforming the benchmark indices. You have the benchmarks, I beg your pardon, outperforming the broader markets in trade. Let's quickly pull up the Nifty as well as if you see in terms of Bank Nifty as well. 1.5% up move coming in terms of Nifty 50 as well as Bank Nifty, which is up almost 1.4%. We're above the 21,650 mark, and the advance decline ratio as well in terms of Nifty 50 is absolutely in favor of the advances. ONGC, Adani Enterprises, Reliance Industries, Coal India as well as Adani Ports, all of these counters are seeing smart moves upwards of around 3%. Pressure building in terms of pharma majors like Cipla. Dr. Reddy's ahead of numbers is down 1%. Bajaj Finserv trading under pressure, Infosys as well as a Bajaj Auto, which is pretty much on the borderline. If you see in terms of Bank Nifty as well, almost a 600 points rally coming in terms of Bank Nifty. Seems to be a good day of trade with just one stock declining, which is AU's Bank, and that's mainly on the back of an earnings reaction. IDFC First, PNB, Federal, Kotak as well as Bank of Baroda, these are the top gainers as well in terms of Bank Nifty. Agam, if you see in terms of broader markets, mid-cap and small-cap, yes, in the positive, but you are seeing that underperformance coming in as compared to the benchmark indices.
Right.
Is this a start to, the rally coming to a stop in terms of broader markets?
Yeah.
And what is that picture that you're seeing in terms of the technical part of it?
Right. So, Hiral, of course, the vote on account aside, we're also going to the latter half of the earnings season. And we all know that historically that also means that the relatively more problematic earnings start coming in towards the, the end of the earnings season. That's perhaps something that's going to weigh on the broader market. So that's always something to consider. But, that's how things are shaping up. And let's not forget, we are still seeing strength as far as benchmarks go. So it's going to be a mixed, next few weeks as to what we can expect, not only from the vote on account, but also from earnings. Today, of course, we are talking about a whole host of stocks which have already come out with earnings, also a handful of broken notes, because of which we are seeing some of your Nifty counters, in fact, advancing in trade today. So while we're going to talk about Adani Enterprises, we're going to address what's happening with the oil and gas space. So something like a Reliance will be in a focus, along with ONGC, which is in fact top gainer on the Nifty today. Cipla on the top loser on the Nifty, of course, for many reasons. That's also something that we will consider. And besides that, we're covering a handful of names from the broader markets too. But to address all this, we are in conversation with Rohan Mehta. He's the founder and portfolio manager at Turtle Wealth, who's joining us on the show. But before I go to Rohan, let's take a look at what's happening with Adani Enterprises. Now, at the moment, we're seeing a lot of strength. In fact, at one point in time, Adani Enterprises was up nearly 5.5%, nearly 6% in fact. It's moderated from there, but it's still gaining and advancing by a good 4% at the moment. Let's get in my colleague Harsh Sata, who is going to give us an update on a broking note and why they are bullish on Adani Enterprises. Harsh.
Well, Agam, Cantor Fitzgerald has initiated coverage on Adani Enterprises and given an overweight rating, target price 43.68 rupees a share. Very solid upside, 40% upside plus even from here. Now, let me break down the reasons in 4 quick points. First off, what they're suggesting is as India moves from the, towards the third largest economy, 2 things will be required, physical as well as digital infrastructure, and Adani Enterprises are the core forefront to enable India to do exactly that. So that's one, that's the quick first point. The second one that the note seems to suggest is that most analysts on the street seem to be ignoring something like an Adani Enterprises, and Adani Enterprises is the 10th largest non-financial company listed on exchanges, and despite that, it's largely ignored by the analyst community. Therefore, investor awareness for the company is lower, investor knowledge is lower, and therefore it also gets lesser coverage, which is the second reason why they are quite bullish on the stock as the coverage starts to increase. Also, what they're suggesting is that Adani Enterprises over the last year or so has made notable progress with regard to where its balance sheet is. Earlier, all the growth was funded through debt. Now, they are consciously repaying debt, toning down on that debt number, and therefore the balance sheet is actually becoming stronger day after day. Several businesses incubated by Adani Enterprises. It's a master incubator is what the note suggests, and that is the one big positive. It has 6 businesses which are literally free as per the SOTP valuation which Cantor Fitzgerald has extrapolated, and therefore they believe that there is also a bit of margin of safety, and as some of these businesses list, they will unlock a lot of value as well. So quite bullish in terms of the note that's coming through.
Right. Thanks so much for that, Harsh. Of course, a standard disclaimer that the channel that you're watching is a part of the Adani Group, and of course, we'll continue to get you more updates there. But let's take this particular counter with Rohan. Rohan, good morning and thanks for joining in. Your view on Adani Group companies and Adani Enterprises specifically, you heard my colleague out. How are you placed when it comes to this particular company going ahead?
Yeah, so what he told was really, really, very fact, because we at the institution side and fund side has a biasness, and the obvious reasons of what biasness is all about. And believe me, see, because we are public managers, we are public fund managers, investors doesn't want to have a sleepless nights or whatever has happened, and that was the reason. Now let us take all this biasness on a side, and let us individually take it as a number-based company, right? Adani Enterprise specifically at 130 times of valuation, with still not at all-time high profit of what they had made in 2015, 16, 14, with margins of 17% now, margin dropping to below in single digit. These are all the concerns, as important as other concerns. But let us put that we feel that Adani Enterprise specifically, because that's what we are talking about, is extremely expensive, and we would wait for the company to come into a consolidation phase, creating value in the form of numbers, and then looking forward for investing into it. At 130, it looks exorbitant expensive.
Okay. Well, that's your view on Adani Enterprises, and of course, we'll continue to get you more updates. But on that note, we slip into a short break. But on the other side, we get you a lot more in terms of the long list that we have for you for this show. Stay tuned in.
Welcome back. You're watching Hot Money. Now, one stock that is in focus that reported numbers last week is Cipla. Overall, the stock is trading under pressure with cuts of around
think we are ready. ऊपर करो zoom in plus zoom करना होगा plus वाला ऊपर और करो और नीचे करो बस सेंटर में ना नीचे करो नीचे वही रखो या तो सबको साफ हो जाएगा थोड़ा सा यस बस ये सही नहीं है दिस इज द राइट चाहिए now audio issue is over na
Hi, Mr. Chatwal.
Clear.
Mr. Chatwal, can you hear me?
Yes, I can hear you.
Okay. Guys, I have a bit of an echo in my ear. Can we get that fixed? Also, how am I introducing this chat? Okay. अभी नहीं है. Are we starting? Welcome to NDTV Profit. We're speaking with the management of Indraprastha Gas about the quarter gone by. The company has reported a PAT number of 475.5 crore rupees. That's a decline of about 14% on a sequential basis. That's on the back of a top line growth of about 2.7% or thereabouts. I'm joined by Kamal Kishore Chatwal, who is the managing director of the company. Mr. Chatwal, thanks so much for taking the time and for speaking to NDTV Profit. Let me first ask about the volume picture. 8.5 SCMD for the quarter gone by. Was that expected? Was that in line with expectations? And what is your reading of the current volume trajectory?
A very good afternoon to your viewers. Our guidance has been that we will be exiting the year at around 9. So we were expecting around 8.6 in this quarter. So there has been a slight 0.1 million drop. And the major reason has been that the festival season in between that has impacted 2-3 days of sales. So that has been the cause. In addition to that, we had to increase the prices of CNG twice during the quarter due to the reduced APM allocations. Although that has not impacted our conversions too much, but this quarter we had 400-500 buses of dips, 100 buses of dips. They retired during the quarter. So, in fact, we have been able to absorb the loss of those volumes and increased around 2%.
Understood. So, are you confident of hitting that 9 SCMD mark, or is it going to be challenging to do so?
No, we are confident of exiting at around 9 because of some of the days of the week we are already crossing 9 million. And some of the steps that we have taken, commissioning 50-60 stations, increasing the dispensing points. So that should help us achieve or cross around 9 million comfortably.
Understood. On the cost side, and you mentioned this already, the lower APM gas allocation is proven to be a bit of a pain point. As I understand it, it was around 82% in the quarter gone by, and in quarters past it has been as high as 87-89%, which has forced you to take those price increases. Is that something that is likely to continue going forward?
Yes, as you know, the more and more entities, as more and more GAs get commissioned, and the domestic gas is not increasing at the same pace. So this percentage is going to go down for all the entities, not only for IGL. And although we had made up some of the volumes through HPHT, high pressure, high temperature gas. So in this 82%, there is around 4% of those volumes that we had sourced in December. That has somewhat reduced. Otherwise, the APM allocation is at 78%. And going forward, all the entities will have to source gas outside because APM allocation is going to go down. We have taken some of the steps towards sourcing. One of the major area that we feel all CGD entities should work is the CBG segment, because that is the cheapest source, cheaper than even the APM, because there is no transportation involved, transportation costs are not there. There is some tax advantage there. So keeping that in view, it is 10 to 15% cheaper than APM. So that is one segment that we are working on. We are setting up 10 plants, CBG plants ourselves, as well as 20 through other LOI holders. I mean, they will be setting up plants and we will be sourcing gas. So 20-30 CBG plants will be.
Sorry, what is the expectation in terms of the mix on account of this addition, and when will that change, sir?
I think whatever decrease would be there in APM, so we are trying to make up through this CBG volumes. So whatever 1 lakh, 2 lakh volume decrease will be there. So we intend to make up that so that the source of gas, the APM, CBG as well as HPHT, they remain around 80 to 83%.
But when will that come on stream, sir?
So some of them have already started commissioning, but in next 1 year we would see all the plants getting commissioned.
Okay, so then can I assume, Mr. Chatwal, that there's going to be a little bit of volatility in the margins because of this uncertain cost environment and because of the dependence at this juncture on imported LNG? Is there going to be volatility in margins?
No, there won't be so much volatility, but because we have all the long-term rest, 18%, 20%, whatever is the balance. Right now, we are sourcing around total 31% of our volumes is through RLNG. I mean, what we are talking is only the CNG and domestic PNG. In addition to that, we source for industrial and commercial segment also. So total around 69% is this volumes and 31% we are sourcing. And we have all the long-term contracts. So there is not much volatility in long-term and medium-term contracts. So we have all term contracts. Spot volumes is very, very less or rather negligible. So that's the reason that we see that our margins may not have that much volatility.
I'm only asking, sir, because you've seen a considerable drop on a sequential basis in the EBITDA margin. I'm just wondering whether that is likely to happen in Q4 as well, assuming that this APM is going to continue to go down and you're going to take about a year to bring the CBG on stream completely. So there could in fact be a bit of an issue dealing with those costs. Will you have to take price increases in Q4 as well?
No, in Q4, fortunately, we had slight increase in APM allocation, 1,20,000 or so. That is increased from 1st of January. So that should help us. In addition to that, whatever the CBG plants are coming on stream, what I said was the 1 year is for all the plants to come on stream. So every month or 2 months, we are commissioning new plants. So that 7.23 EBITDA per SCM.
And on that note, it's a wrap on Hot Money, but lots more lined up on the other side. Stay tuned to NDTV Profit.